Let's get straight down to business. This is Wednesday, 14th of January, and this is a review. So on the daily chart, you can see a displacement lower. This is happening at 9:32 New York time. So the opening bell just happened. You saw the 15-minute candle here showing the opening bell trading lower. And at this opening bell, I'm taking this screenshot. Price is rejecting the daily volume imbalance right here. We're seeing it trade below the low of the New York opening gap. We see a lack of speed and displacement to reject massively away from this half of previous week range, which is also the main threshold of this down close candle, including the wick. So at mean threshold, we want to see an instant rejection. If that does not happen, then we're sure lower prices will prevail. So below the marketplace, we have this old New York opening gap, but most importantly, the sell side liquidity. There's a massive pulse of New York PM and AM lows, and there's a void portion of an open range gap below price. Alright, here's the Tuesday's midnight opening price. We're currently trading below that on a Wednesday. This is significantly bearish, in my opinion. Trading below midnight opening price for Tuesday on a Wednesday for on the day is bearish and even gives bearish signatures for the expansion of the weekly profile. There's massive sell side liquidity below, and if more bearish signatures present, we're going to be looking for shorts. That's what I was outlining as the market was trading. Asian highs are present, yes. London highs are in the charts as well. But price has been trending lower, and it has provided this 1 hour buy side imbalance, rather 1 hour sell side imbalance, buy side inefficiency. Its low is here, its high is here. I want to see price displace above it, find support at the high of the 1 hour CB in order to be interested in London high or Asian high. As long as we stay below this array and focus on lower prices, you can see the body of the candle here. This opening price is delineating 8:30 open. Midnight open is way up here. So this market, from the point of view of opening prices, is trading in a discount. Yes, we want to be long when below and in a discount. We want to be looking for higher prices because you're buying at discounted prices and you're selling at premium prices. Yes, but winning traders, the 1%, have the ability to buy high and sell even higher, agreeing with the market. They also have the ability to short low and cover their shorts even lower. These are habits and characteristics of the 1%. These are the characteristics we need to build into trading, but to know when to do them. Higher time frame is suggesting bearishness. On this 15-minute time frame, we can see massive displacement low and while below the 1 hour inefficiency. We're seeing strong resistance coming around the mid threshold, rather the constant equation of this 1 hour inefficiency, and also this sell side imbalance bias inefficiency, high here, low here on the 15-minute time frame. Looking at this midpoint is right here. So this is a configuration of this 15-minute CB, and we're seeing the bodies of the candle respective significantly precise. So for those reasons, it's okay to sell or short while at discounted prices. After all, the 8:30 opening prices within range right up here. I'm going to be dropping the lower time frame to look for an entry on the 1 minute time frame with 5-minute confirmation at least. So I'm short bearish looking for lower prices here. So this is the trade. Entry was right here as it tapped into the fair value gap. So this is a bearish fair value gap continuation. The drawn liquidity is clear. The drawn liquidity is New York PM lows. Or rather, you can see it at the bottom of the left side, New York AM lows. I'm putting the terminus of the trade at consequent encroachment of the void portion of an old open range gap, but that's the best case scenario. More realistically, this sell side liquidity pools are the drawn liquidity. The other flow has been bearish. I've been talking about that from the higher time frames. The current or at the open, we see this massive move lower. But notice Lower quadrant of the open range gap has been rejected as price moves lower. It first of all rallied higher, manipulation moved higher, hitting the lower quadrant before we see the displacement lower. Note the lower quadrant, note the fact that we are below a 1 hour array. The array want to see, if we are below it, want to see displacement lower. We need to trade above that 1 hour array to see higher prices. And we have just seen a confirmation where at the open we saw a liquidity read on that short term, on the relative equal lows, the short term rather relative equal highs. Those were short term highs. They were raided, and then we saw a displacement lower. That displacement lower caused the market structure shift and a change in state of delivery, bearish. That's what got us in at the fair value gap when it retraced higher on the new 15-minute candle. Price is displacing lower. Target is the last pool of liquidity before the void. And you see me, okay, that's it. I take one contract off at that level, was a partial, and I was holding the rest to maybe see how we explore below. But upon seeing that the market was trying to retrace, it's also say deeper retracement before main threshold is hit. So I'm allowing for the full position to be closed. So I do not require the terminus to be hit. The trade is already profitable. I risked 2 contracts because it was a 50 handle stop. So I wanted to risk 0.5%, and I did that incredibly well, risking just 2 contracts. So now that the trade review is out of the way, we can see how the day played out on the New York AM session. This is the setup, beautiful delivery. After this price retraced, we see it almost hit the Reaper for this session, which is right here. It fails to touch that, and that's bearish. This was an inducement. Regular trading hour New York PM lows were not properly swept. This is just a nick. It did not really sweep it. So I consider it an inducement of the body staying above it. It is trading at previous week, rather a premium week lower quadrant from a daily chart. Price rallies, retracing deep into this displacement lower. It attains equilibrium of this leg down, and we see a sharp move downwards below old New York opening gap. Trading back into it should be difficult, and we should see resistance. Price goes exactly to equilibrium of this high to this low. Equilibrium is right here, and there's a fair value gap in it. This is the silver bullet hour between 10 a.m. and 11 a.m. We see a fair value gap to short from, and this short sweep out the sell stops that have been accumulated here and move lower as low as the void portion of old open range gap. So that was a silver bullet trade, and we have seen 2 continuations today. The first continuation during the opening range, and the second continuation during silver bullet hour. So launch consolidates, properly delivering this void portion of old open range gap. This box here without the background is actually this box. I've just removed the background. So this is the void portion of an old open range gap on regular trading hours. Launch consolidates, properly redelivering buy and sell side delivery around the center of this array. It does not take the low, and that's an indicator of higher prices. The low is never traded to. Price rallies after the 1:30 p.m. open price. Initially it declined, sweeping the sell subs accumulated during London. So London sales accumulated during launch. Launch sell subs have been swept at the 1:30 opening price. That is key time and key level of liquidity. So launch lows are swept, price rallies, market structure has shifted here, it's changing itself delivery. The silver bullet hour is wonky, it just goes back and forth, grinding higher slightly. And going into the market on close macro, we see this run lower, sweeping a short-term low, taking sell stops that have been accumulated during this accumulation phase. So sell stops have been engaged. Order pairing is taking place at this low. It is also at the void portion of old opening range gap midpoint. It rejects this midpoint and rallies higher. We're expecting buy side liquidity to be taken. It is instead induced just ahead of a key time, market on close macro, with the period between 3:15 p.m. and 3:45 p.m. So this inducement takes place just like the one we saw during the New York AM session. Price did not sweep this pool of buy stops. It induced them, retraced lower, and retail look at this as support, rather resistance. A double top type formation, and they're looking for lower prices. It delivers lower prices for some time, but that's just a retracement to a 5-minute bullish order block. Price returns to this order block, rejects its upper half during the market on close macro. It sweeps both the liquidity here and induces this here. After the market on close macro, going into the close at 4:15, price rallies one more time, sweeping buy side liquidity. Market on close macro today has been used to target profitable stops. We have been shorting all morning. Profitable positions have been on shorts. So those shorts are being protected by buy stops. The buy stops are both here and here. Market close macros takes those levels properly, and especially because we have traded to our targets for the day. Sell side risk has been taken. The void position open range gap has been redelivered. That was the purpose of today's price action. And since that is done, market on close macro is free to take out those who have been profitable on the day. On other days, market close macro would target the objective of the day when the objective has not been met. So for instance, if we see trading above here and it was market close macro, we will see a wicked displacement lower, taking the targets of the day and attaining the levels which were the objective of the trading day. That has been it for this review. If you liked it, hit the like button, but most importantly, subscribe. It really helps out the channel, and I'll see you in the next video, bringing you more value.